Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for Thursday, May 13th. I am your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com. That's our home on the web, MarketTalkAg.com. You can find all of our social media links there, our YouTube channel, all of our streaming sources, and much more. It's all online at MarketTalkAg.com. Well, it was a bit of a bloodbath throughout the grain and livestock sector here on this Thursday. A lot to talk about. Let's bring in our good friend John Heinberg with Total Farm Marketing joining us here this afternoon. John, good afternoon. I know it's been a busy day for you, as it has been for pretty much everyone involved in markets in the ag community today, because it was kind of a bloodbath out there.
Yeah, it was a difficult day. It kind of started on the overnight session. We could see the selling pressure kind of come in to the marketplace, and then it just seemed to accelerate as the day went on today. A lot of stops probably getting triggered as we moved through the downside of this market, took out key support after key support. It was one of those days we shake out a lot of the week-long positions in the marketplace. Tomorrow we'll probably see some additional selling pressure, maybe for margin purposes, because obviously, some pretty big hits on some accounts in that regard today. But it was in every commodity. So, it wasn't definitely tied to a news event. It wasn't tied to anything that came across the overnight information wires. There's a couple different things that maybe were out there that made the market a little cautious. Obviously, we had that USDA report yesterday. We rallied hard into that report. So that maybe had some money flow coming out because, we didn't get great numbers yesterday. Then cattle market and hog market just kind of fell suit. But, you saw it in oil was down a couple bucks a barrel today. You saw it in a multiple of the commodity space. Maybe we just saw some money flow leaving the commodity sector after a pretty good run, jumping back into the stock market, which was down 1,400 points over the last couple of days. So, a lot of little pieces that adding together just turned into an aggressive day of money flow and made it a difficult day to sit here and watch the ag commodity markets. That's for sure.
Very, very true. And you hit on a couple key points there. I think one of the biggest ones I was thinking watching this market too, and you alluded to it, just seemed like a lot of stop orders were probably triggered, that it kind of accelerated the computers, the momentum kind of traded us more to the downside once we triggered some of those stop orders here today, whether we're talking corn, beans, wheat, you name it. Bean meal down hard, exceptionally hard today. It just seemed like that was part of it. A lot of stop orders triggered, and a lot of long liquidation, whether it be big funds or small funds. You and I were talking about that a little bit before we jumped on the air.
That's one of the things that we've been kind of watching, and a lot of people have been wondering, who's been driving this grain market, especially higher the last few weeks here. You go look at the managed money positions. They were growing their bean position a little bit, which was understandable given where things were and how that market was pricing out. But on the corn side, realistically, over the last couple of weeks, they were basically still flat. In fact, even last week, even with the strength, they cut 6,000 contracts off of their long position. That's the big managed money hedge funds. So who was it? Now, we were thinking it was a little bit more of the speculator, the private investor, a small hedge fund markets, playing the momentum trade, and it probably got behind this market, squeezing the shorts, which was the commercials at this time frame. And then when we got to a certain point, maybe they're hoping to hit a home run, had a good win in, didn't get a number that we wanted to see in the USDA report yesterday, so they decided to vacate their positions, and we saw this, this profit taking kick in. And then it just, like I said, fell into everything in the other markets as well. But you look at it, cattle had a nice little rebound going into the day. Feeder cattle have had a nice rebound going into the day. Hogs have obviously been strong all the way through. It just felt like one of those days that some people wanted to get out and, take profits, and, unfortunately prices suffered.
Well, and we've seen this quite a bit here recently. We get a day like today and we think, oh, is this the start of a longer-term correction in this overbought market? And then we turn around within a day or two or three and we buy the break once again. So in your opinion, and it kind of sounds like I might know the answer here, but do you feel like this is a sign of the longer-term correction, or is this short-lived?
At least in the first initial reaction to me, it feels short-lived. Now, the only thing I was really disappointed about today was the fact that July corn faded back to limit down at the end of the day. We hit limit about midday, then we rallied about 12, 15 cents off those lows. I was feeling pretty good, like, okay, maybe like you said, buyers are stepping in. Here's the value. So we'll have to watch how that kind of plays out. Now, May contracts for grains come off the books tomorrow. That's also part of what was going on today. That just brings extra volatility in the markets as when we see those contracts drop off. Then we got to see what July contracts want to do. You go look at corn, we're trading 50 cents underneath that May contract going into expiration tomorrow. And over the past, we've had that gap and we filled it and actually gone and put a new high in. So realistically on the old crop side, fundamentally, the numbers yesterday were relatively friendly. Corn, beans was a kind of kick the can down the road in terms of numbers that the USDA put out there. Corn was actually slightly under expectations. Now a 1.25 billion bushel carryout, is still a little heavy for 750 corn. So maybe we saw some squaring up in that regard. Back to those old crops, though, it's going to go back to the cash market. What's the cash market going to do? I guarantee you're going to see basis levels push back up again. If they weren't selling corn at 720, we're not going to be selling it at 675, and the same thing goes for beans under 16. So we'll have to see how things kind of shake out going into next week. But again, volatility is not going anywhere going forward.
No, it is definitely not. Looking as well, weekly export sales here today, this morning. I know those shipments to China. China's been stepping in, buying more new crop corn here the last few days. They even added another announcement this morning. Weekly export sales, the new crop announcements kind of overshadowed some of the old crop cancellations today. But overall, on weekly exports, especially on the corn front, we had a pretty favorable report there today, it seemed.
On the new crop side, yes. Old crop, we're negative, so maybe that added a little bit more pressure into the market overall. But what have we seen in the last few days? China's really stepped in, picking up corn supplies very aggressively. In fact, right now, 21, 22 corn sales are, the highest we've seen in about a decade, and it's actually early. Typically we don't see this much purchase happening at this time frame. And then the fact that China has aggressively been in the market now, picking up well over 100 million bushels of new crop corn in the last 3, 4, 5 days here. And I expect them to stay in the market even more so. Now, this might be tied to the fact that the Brazilian crop has still got issues, that summer supply is going to be maybe very limited. And you're seeing these global end users saying that we want to lock in things now, before next year's corn crop in the United States goes to $7 a bushel like we just seen in this year's old crop. So we'll have to see. There's still a lot of things that are very, very friendly out there. Again, USDA yesterday keeping 21, 22 marketing year at a 1.5 billion bushel carryover. That was disappointing yesterday. We kind of thought that number would be a little bit tighter. But at this time frame, at least they're putting numbers out there expecting a near perfect crop. And, so we'll see how that comes together as we go forward.
I know Brazil, we keep watching the estimates there for that safrinha crop. USDA dropped theirs to 102 yesterday. Some private analysts are down around the 100 range. I know Conab was at 106, but that forecast turning hot and dry again through the end of the month for Brazil. It just seems like those yields keep dropping like a rock, and that's going to factor into everything, I think, here moving forward as well, even more than it has been.
I agree. In that regard, it's just we've seen some reductions kind of come in. It looks like we're going to stay with a drier forecast as we move into the next 10, 15 days down in some of those key regions. That crop's at this stage is struggling and will continue to struggle. There's still some very good, just like if we got it around our area of the world, there's always pockets that are in good shape, and those pockets are big, so they're still going to produce some crop there. But I would say most estimates are still over 100 at this time frame. But listen to the private analysts, a lot of them got it down to the 95 million metric ton level for Brazilian corn, maybe even down to 90. That's still going to be a big hole in that balance sheet. And again, that's why we're seeing some of these end users on the export side step into our new crop corn prices. Realistically, now at 558, I probably expect to see those sales even ramp up a little bit more going forward. And same thing even on beans. We haven't touched on that market much at all. And those numbers yesterday by the USDA did not give me anything that may be concerned regarding supply going forward. If anything, just tells us we better hit a crop or just even get to somewhat comfortable levels on carryover.
Well, and talking about hitting that crop, I'd love your thoughts on this. We obviously know the weather story in the U.S. We're starting to hear more and more chatter about it, more and more nervousness about it, especially the Western Corn Belt. I saw this stat today. Western Corn Belt, the past 30 days has been the driest on record since 1980 for the Corn Belt west of the Mississippi. Now, we're May 13th. We realize that we're still early in the game. We've had optimal planting conditions, but you start hearing stats like driest on record since the 80s, and you start hearing things like that come into the equation and more forecasters getting worried. I'm wondering how much all of this rumor is feeding into this market and how much more it's going to pick up the next couple of weeks ahead.
No, realistically, honestly, I don't think we have anything in the terms of weather market built in this market right now, especially after today's reaction and the price movement. You know, we've got those concerns out there. Drought monitor maps are looking what they are. Obviously, I'm not telling anybody something they don't know. You know, one thing, and you know, it started this week on Monday. We had some kind of unexpected rains come across the Corn Belt. Good planting progress, and that's what sent us on the push lower on Monday. Now, a couple of things that we need to keep an eye on here. First off, how much of that rain is there? How timely is that rain going to be there? Now, we are hearing some models that are starting to get a little more, you know, production friendly as we move into summer. So maybe that's some of what's playing in here too. You know, that maybe we got a little bit of a prove it to us mentality in terms of what this crop might be. The other thing I'm keeping a close eye on, had a lot of conversations with some producers on the eastern side of the Corn Belt out there in Indiana, Ohio. They are having a very difficult time getting things in the ground. In some regions, they're wet. You got at least another 8 to 10 days, they were telling me, before they could get back in the field. And they're forecasted to get more heavy rain again this weekend. You know, one producer even said to me, it's as bad as it was for us this year as it was in 2019. Trouble is, that got a little bit overshadowed because of the strength of the planting pace in the western half of the Corn Belt. So the average looked really good, but you go take a look at those states, Indiana, Ohio, and that region, they're falling behind the pace here, and that could be something that, you know, we need every acre and we need every bushel that could come into play. So keep an eye on that in terms of the weather, and obviously, you know, where's the rainfalls, how timely are they? You know, we talked about, you just mentioned how dry things are. The biggest thing that we also hear from those people on the western side is that the groundwater moisture, that subsoil moisture, is not there. In other years, that has been a bit of a saving grace. In the longer run, at least you had some moisture that those roots could get down into.
Very, very true. And finally, I think on the grain side here, real quick before we shift our conversation, it would just seem to me, again, don't let emotion take over and stay disciplined with your marketing, especially looking at a day like today, John.
Yeah, the worst thing is, or the thing we need to focus on now, like I said, is follow through. What happens the next couple of days in terms of price? You know, we have got an extremely volatile market. You know, unfortunately, we took away most of last week's gains today. You know, we could come climbing right back up into those windows. Now, maybe if this turn here and this type of a day in here, if we do start seeing some value back in the market, we get December corn poking back up into the 6 window, maybe accelerate some of those sales that we've been kind of thinking about the last couple of weeks. You know, again, I used some stops under the market for people this week. You know, we closed under 625 the other day. That was the day I told people, let's sell some corn. You know, start continuing to work those downside targets as the market, if the market does decide to move back higher. So if we do a certain barrier, we sell some more corn. You know, just be strategic. You're not going to hit this this nail on the head every single time in terms of marketing. You still got great value out there. You know, so at this time frame, you know, start staying focused on what those opportunities are. Make sure you stay disciplined overall, you know, and keep an eye on where this market wants to go. But it's going to stay pretty hectic, I think, here all the way through summer, especially with all the different variables that are involved this year.
Let's talk livestock. And I would have thought today, with a sharp sell-off in grains and corn prices, we would have a higher cattle market today. And we had the opposite. We were lower along with grains today. What happened in this cattle market today, John?
You know, the cattle action and the price action in the live cattle market, that kind of was the other tip to me that said, okay, this is not just about the grain markets today. This is commodity wide. You know, we saw some pullback and, you know, happen again. And even some of the outside commodities, lumber's gotten extremely choppy and volatile recently. You know, so maybe this was something that was building as we're getting close to the, you know, into June. Maybe that sell in May and go away mentality that hit stock markets might hit the commodity markets this year. So we have to be careful. And that's truly what it felt like today. You know, I know cash trade is still disappointing and it's been very, very slow to develop. You know, we continue to hear some of the packers starting to talk about, having their chain speed not up to speed as they're having some employment issues. Tyson Foods came out and said that employment in terms of people missing was up 50% over last year at this time frame. There's people just not showing up for work, and that's affecting 2 or 3 plants I've heard that from this week alone. Well, so add that to the problems. We got enough cattle out there need to be processed. We don't have the capacity to handle it, just due to the fact that the slaughter plants aren't there, and then the people inside the plants aren't there to keep the lines running. So with that, you see carcass values continue to run. We're over $310 on choice carcasses. So there's some good value there. Unfortunately, the packers are the ones with the margins right now, and the cattle producers sitting on all the cattle with high grain prices can't get them moved. And then we just got a bit of a logjam again. So those things scare me a little bit. I was a little cautious about a turn, but boy, when we were limit down today, you could tell that was a little bit more than just a technical break, considering the fundamentals still on the most part are kind of staying sideways to supportive in this market.
Well, I think the same would probably go for hogs today too. It was probably just a lot of these outside factors playing into the hog market. And I know both beef and pork today, weekly export sales were down. So I'm sure that also played a role into both cattle and hog markets today as well.
Yeah, it did. We didn't have the best week of sales, I would say, at least in terms of both of them off last week's pace. One thing we do got to remember, China was on holiday for about 3 days last week, so that kept them out of the market. And hogs, at least, the shipment number of 41,000 plus on metric tons was still very good. And even looking at the carcass move today, $6 higher at midday. Last year we were 121 was the high during the whole COVID situation in terms of pork carcasses. Midday today, hog carcasses were over 120. Totally different scenario this year, at least in terms of the demand side of the equation driving this market higher. But the hog market's been pretty rich in terms of its move. Seeing that June hog kind of just roll over a little bit here recently. Feels like maybe we're slowing down. But we did feel that technical gap from May 3rd today on the chart, so maybe that's something we've been kind of waiting for. We'd be shocked that the hog market would fall back maybe a little more, test a little more support underneath. If that holds, we're seeing that pushback out there and the cash market stays strong, that this market still can find one more good run higher going into the summer months.
Any thoughts on the dairy market today, John?
No, dairy markets, got some good numbers back on the board again today, $19 plus all the way through into the fall. So I think there's some good opportunity for producers out there. Cheese trade's been kind of choppy. And, last week at this time, we thought the milk market was starting to find some footing, and we got nailed with a limit down day. Now that we come racing back here again this week. So it kind of tells me there's at least a little bit of support under the market, but I'm very, very cautious. There's a lot of variables in play coming into that market. Again, good value. Make sure we're finding some way to build the floor.
John, any other final thoughts you have for us today? I know there's other things we haven't touched on in outside markets and the macros and the geopolitical stuff and the pipeline and everything with that. But I know there's more we can talk about, but you got any final thoughts for us today?
Tomorrow might be a pretty key day. We'll have to see what the tone is in a lot of these markets. As I wrote the afternoon reports today, that was some of the things I kept stressing. See how we go into the weekend. If the grain market's stabilized, we'll probably find some footing again, and maybe not go back to the highs, but at least get some traction there. Because obviously what was a value 2 weeks ago is now a lot cheaper. We'll have to see how that plays out. But again, it's going to be volatile. You're going to have days like this. As much as we enjoy the euphoria of beans being up 40 cents yesterday before the USDA report, we got to handle beans being down 50 cents the day after. That's just going to be something that we're going to continue to see all the way through, given the situation that's in these markets these days.
John, if producers need any help with their marketing plan, need some advice, I know they can reach out to you and the team there at Total Farm Marketing and get that advice they need, can't they?
Feel free to give me a call anytime, 800-334-9779, or shoot me an email at johnh@totalfarmmarketing.com. Don't forget about that website, totalfarmmarketing.com. Again, we just had a webinar yesterday covering the USDA reports. They're free to anybody who wants to sign up, as well as a lot of other great information that's out there.
John, appreciate the time as always. Have a great rest of your week and weekend, and we'll talk to you next Thursday.
Thanks for your time, and have a great week, everybody.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk, brought to you by FS Grow Mart. Find us online, markettalkag.com. This has been the Thursday, May 13th edition of the show. I'm Jesse Allen.